Welcome to our 2021 webinar series. LLIS believes that in 2021, knowledge is key. Each month, you'll learn key insurance solutions to better your insurance knowledge. Our insurance specialists keep up to constant changes in the insurance industry, especially during a pandemic. Our specialists will review some basics, use case studies to show how LLIS crafted risk management strategies, and answer your insurance-related questions. Each webinar will last about 50 minutes, and you must be logged on for the full 50 minutes to receive CFP credit. Please be sure to ask questions as you have them by typing them into the questions box. We'll answer all questions at the end of the presentation. Today's webinar is being recorded and will be posted on our website within a week in case you missed it. Today's presenter has been part of LLIS since 2009. She handles many of your clients' cases for life, disability, long-term care, and annuities. Since 2014, she's been supervising our very busy new business team. She earned her FLMI designation in 2016, passed her Series 6 in 2020, and recently received her AALLU designation. And now, Jennifer Stiles.
Thank you, Claudia. Today I'm going to be talking about what's new in life insurance underwriting. In an industry that is so slow to make changes. We've actually seen more changes in underwriting within the past 18 months than any other year within the past decade. So today I'm going to go over what is involved in underwriting process and address the changes that have occurred as a result of the pandemic. So let's first start out with the basics. What is underwriting? Underwriting is assessing and classifying the degree of risk an insured represents to the insurance company. The underwriter is going to review a lot of information about the client and decide whether to accept or decline that risk. Obviously, the higher the risk, the higher the premium. Now, when it comes to underwriting approvals, especially for life insurance, I like to think of them as buckets. There are predetermined conditions that you must meet in order to fit into that bucket. A certain blood pressure, cholesterol level, things like that. And there are also predetermined premium prices associated with these buckets, and that's what allows us to accurately quote different companies. Preferred Plus, Preferred, and Standard Plus, these are all considered preferred classifications. These are people that have longer than average life expectancy. Then there's the standard approval. This is somebody who has average life expectancy. Life insurance has been around in some form or another for centuries, but up until about 40 or 50 years ago, the best approval you could get was standard, and then they rolled out the preferred classifications. So anybody who gets a standard approval or better, these are all excellent offers. Now, if somebody poses a slightly higher risk to the insurance company, they may be table rated. And the way table ratings work, there's anywhere, depending on the company, anywhere from like 10 to 15 table ratings. And the way they go, it's like table A, B, C, or table 1, 2, 3. So the number corresponds to the letter. And the way table ratings work is that each table rating is 25% higher than the standard premium. So if I applied for insurance and I was approved at standard rates and my premium was $1,000 a year, if I ended up being approved at table A, it would be 25% higher. So my total premium would be $1,250. Table B would be 50% higher, so it would be $1,500 and so on. That's the way every insurance company does the table ratings. Some do it based upon the standard premium, others do it based upon the standard plus, but they all do it based upon that standard or that 25% increment. Every once in a while, we'll see a flat extra. Maybe somebody health-wise is approved at preferred rates, but they like to skydive on the weekends, right? So if the insurance company is going to cover that, they may say you're approved at preferred rates with an extra, $5 per thousand extra of coverage. So they're tacking on an extra premium to cover that hazardous activity. Every once in a while, an insurance company for life insurance will allow an exclusion to be put on the policy. So they may give you the option. If you're okay with us excluding skydiving, then you can just pay the preferred premium, which is much lower. If you want skydiving covered, so if you were to die in a skydiving accident and you want that covered, then you're going to have to pay that extra, flat extra. Now, all these buckets have male and female rates. Everything else being equal, women pay less for life insurance because we have a longer life expectancy. But we actually pay a lot more for long-term care and disability insurance, pretty much for that same reason and based upon claims experience. There's also smoker and non-smoker rates. Smoker rates are about 3 times the non-smoker version for life insurance. For disability, it may be 25% higher, but for life insurance, it's 3 times. Now, once an application actually goes to the insurance company, this is really where underwriting begins. Until that point, everything LLIS does is doing pre-underwriting to find the best company for your client. And like I said, the underwriter is going to review a lot of information, such as the application, the exam, the motor vehicle report, the medical information bureau, prescription database, medical records, financial information, and additional phone interview. Now, this process can take 2 to 3 months before an approval is made. And we'll go over some of these in more detail and address how COVID and the pandemic have changed the underwriting process. Now, a lot of people think, you know, I'm super healthy, I should be eligible for Preferred Plus, and health does have a lot to do with your final approval, but there's actually 4 different areas that can affect your approval. The first one is lifestyle, medical history, of course, there's financial information, and family history. All 4 of these play into your final approval. Now let's go over lifestyle underwriting. What exactly does that mean? Well, maybe you participate in a hazardous activity. Marijuana, drug, and alcohol use is a lifestyle. Your driving record, and foreign travel. And we'll go into details with each one of these to give examples. There's certain sports and hobbies that somebody may do that can carry an increased risk of injury or death. Now, underwriters must become familiar with these risks and know how to appropriately assess them. And here are some examples. Aviation, that doesn't mean if you're flying on a plane as a passenger, that means if you're like a private pilot. Mountaineering, scuba diving, race car driving, skydiving, there's a lot of others as well. These are just examples. Now, it's important to note that just because you participate in these activities does not mean that you're going to be declined for insurance. All that means is that the underwriter needs to take a closer look into the activity to assess the risk. And we have special questionnaires that ask more details. If somebody says that they scuba dive, we have a special scuba diving questionnaire that's going to ask, like, how deep do you go? Do you do night diving or cave diving? How many times a year do you dive? Things like that that can help the underwriter, you know, be able to assess that risk. Then there's marijuana usage. Before COVID, this was the quickest changing thing in underwriting for life insurance. Since marijuana has been approved in many states for recreational use and just about every state for medicinal use, there have been a lot of changes in the underwriting of this drug. So it's kind of viewed similarly to alcohol. In order to make an assessment, we're going to need to know how often somebody uses it, how much, what form. Now, not to date myself, but when I was in college, you only smoked it in a bong joint or a pipe. Now marijuana comes in edibles and brownies and drops and lotions, you name it, it's out there. So we would need to know what form, the last time they used it, and whether they're using it recreational or whether they have a prescription for it. And based upon those answers, somebody could be approved at Preferred Plus all the way to decline. It depends on their answers and the particular insurance company. And interestingly, it doesn't matter what state you live in. They're not going to say, oh, you live in Colorado where it's legal for recreational, no problem. They're not going to do that. But at the same time, they're not going to say, you know, I live in Florida, and if I used recreational marijuana, it's not legal here. They're not going to penalize me more than somebody else in a legal state. So everybody's underwritten the same way. Doesn't matter what state you live in. And the reason being is that it's still against federal law. So everybody's on the same playing field when it comes to underwriting for marijuana. And I wanted to give a case study here, an example of how marijuana has changed over the past, 12 to 18 months. Here we had Joey, age 40, applying for $1 million life insurance, 20-year term. Now, when he originally completed the quote request, or maybe the financial advisor did, we didn't know anything about marijuana usage. So we quoted Preferred Plus. So looking at that, you would say, oh, apply for American General. That's the least expensive company, right? Well, when we did our interview and he gave us additional information, we found out that Joey likes to either smoke or use edibles 2 times per week or less. He lives in Colorado where it's legal, but because of just that marijuana situation, this is what his premiums would look like. So American General in 2020 would have been the worst company to apply with based upon smoking or using edibles 2 times per week or less. It's 11 times higher than what we originally quoted. They were very strict in 2020 about marijuana usage. Some of these companies would consider him a smoker. Some would consider him table rating, and some of the companies would consider him both table rating and a smoker. And that's why the premiums were so high. So clearly in 2020, Lincoln would have been the best company for him. But I noticed in the past couple months, probably 6 months, that the insurance companies were becoming a lot more lenient about marijuana usage. So I went back to these 6 companies and used the same scenario and asked them, how would you approve somebody with this scenario? And these are the premiums that came back. So as you can see, American General, no longer is considering him table rated or smoker. And several of the companies have become a lot more relaxed on that marijuana usage. I'm not sure exactly why, but I think that's a quickly changing thing right now. So that worked in Joey's favor as well. The third area of lifestyle is somebody's motor vehicle report. They do order your motor vehicle report when you apply for life insurance. And what they're looking for are speeding tickets, at-fault accidents, DUIs, and driver's license suspensions. Now, if somebody had 1 speeding ticket in the past 5 years, that's not going to affect their approval. But if they've had multiple moving violations, that will. And then the fourth area I'd like to talk to you about regarding lifestyle is foreign travel. We've always asked about foreign travel pre-COVID. Typically what we need to know is where you're going, how long are you staying, and the purpose. Is it for business or recreational? Obviously, going to London for a weeks-long vacation versus going to Botswana to volunteer in a village for a mission trip is going to be looked at very differently. There's a lot more health concerns with going to Botswana, okay? Do you have access to clean water? What's the sanitation like there? If you were to get sick, what's healthcare like there? And you could be exposed to other diseases that we really don't have in the United States. Then there's also safety concerns. There could be civil unrest, and Americans could be a target depending on where you're going. Maybe the culture is very different, and you could put yourself in a situation, a dangerous situation, without even realizing it. Now, most insurance companies have always been fine with level 1 and 2 from the State Department. Level 1 is exercise normal precautions. So whenever you do foreign travel, there's a certain level of precaution you should take. Level 2 is exercise to increase caution. Level 3 is reconsider travel. And level 4 is do not travel. Now, due to COVID, all countries were level 4, and not because of safety concerns as far as, civil unrest. It had to do with COVID, so it was more the health concern of traveling. Now, typically, if somebody had booked travel, we would need to wait 30 days after they returned before they could apply for insurance. We do have some companies that, depending on where they're going, they have actually become a little more relaxed on that. Foreign travel, depending on where they're going, they'll consider insuring them now. So that restriction has let up a little bit. Now, that was lifestyle underwriting. Most people think when you apply for insurance, it's all about your health and medical underwriting, and that is a big portion of it. So let's talk about that. Typically, when you apply for insurance, you need to have an exam done. Really what they're looking for is organ damage. So you typically have blood tests where they're going to test for liver function tests and kidney function tests, and they'll test for HIV as well as cholesterol. They'll do a urinalysis. They're looking for drug use in the urine, blood pressures, and the examiner will also do the height and weight. Now, it's been interesting the past 18 months. Some of the insurance companies have always had possible lab-free options, okay, or accelerated underwriting. But it's interesting because when COVID first hit, just to put this out there too, all insurance companies have had an increase in business during COVID. I don't know why, if possibly because everything was locked down, so people had more time to maybe invest in applying for insurance, or maybe some of the younger, healthier people that thought, well, geez, I really don't even need life insurance. I'm young and healthy, are now realizing, wow, your health can change at any point in time. And so maybe I need to get some life insurance, okay? So pre-COVID, SBLI guaranteed lab-free for people ages 20 to 50 for 500,000 and under. Now, this is pre-COVID, and they're the only company that we work with that guarantees. That's important to note, that guarantees lab-free. Lots of companies offer an accelerated process, but it's not guaranteed. Principal has always, well, in the past several years, has always had the option of a possible lab-free option up to $1 million for ages 18 to 60. Penn Mutual may be lab-free up to $5 million, and Prudential may be lab-free up to $1 million. Now, it's important to note that these accelerated processes, they do a phone interview with the client, they run their name through several databases, and there are certain knockout questions that are going to knock them out of the lab-free process, and some have nothing to do with their health. Okay, if somebody's not a U.S. citizen, most companies are automatically going to knock them out of the lab-free process. If somebody's had a couple speeding tickets, there's just certain questions that are knockout questions. And even if they're not knockout questions, they're going to still pull a certain percentage of people out of the lab-free process to do kind of their own internal auditing, okay? Now, with COVID, we're all told self-isolate, social distancing, but they want to apply for insurance. And now they're like, wait, an examiner who has been to other people's homes is now going to come into my home, that there was concern about potentially being, exposed. So the insurance companies were in this quandary because they really need to kind of get this information in order to assess risk, but they understand, applicants' concerns regarding that. So rather than having more people go through the lab-free option, they actually expanded the lab-free option. So like SBLI now has guaranteed lab-free for 750,000 and under, and they upped the age to age 60. Principal upped it to 3 million to age 40, and 2.5 ages 41 to 50 if they've had a physical with labs in the past 2 years. Because what they're going to do is they're going to go ahead and order their attending physician statement or their medical records in lieu of having an exam done. Penn Mutual may be lab-free up to 7.5 million, and Prudential may be lab-free up to 3 million. So again, by default, more people are having lab-free option by them expanding their criteria. And there's a lot of other insurance companies that have lab-free options as well. This is just an example of a few companies we work with. Disability, they typically have, simplified issue where they may have lab-free options for 4,000 monthly benefit or 5,000. They also upped it to 10,000 monthly benefit. So they changed their guidelines regarding the exam as well. Then there's the prescription database. When you apply for life insurance and disability and long-term care, they're going to run your name through this prescription database. And this shows medications that have been filled in the past 5 years. They're typically kind of coded. Think of a traffic light, like color coded, green, yellow, red. A green medication may be birth control pills or a random antibiotic that was prescribed last year. That's something that an underwriter is not going to be concerned with. A yellow medication may be something like anxiety or depression meds or a narcotic. Red medication may be something that a client would be declined for anyway, something such as AIDS medication or chemotherapy. And this database shows the medication, the dosing. It also shows the doctor's name that prescribed it. So even if a client didn't disclose something, say I applied for insurance and I'm on a depression med and they saw that in the prescription database and they look at my application and they see that I didn't disclose anything about that, they can still see what doctor prescribed it and they'll go ahead and order those medical records. Medical records. This is the bane of our existence here at LLIS. This is the longest part of underwriting. It can take several weeks to get medical records. Some people think, Jenny, just have the underwriter call my doctor. My doctor will vouch for me and let the underwriter know I'm healthy. It doesn't work that way. All insurance companies use a third-party vendor, such as Exam One. And 99.9% of all doctors use a third-party copy service to handle the medical records for them. So the way this works is that if they're going to order my doctor's records, Dr. Smith, the insurance company is going to send a request to their third-party vendor, to Exam One, to order Dr. Smith's records. Exam One's going to send an authorization to Dr. Smith. Now, this is an authorization I already signed with the application. That authorization is going to be sent to the copy service, the doctor's copy service. Now, these are not like a Kinko's down the street. These are third-party vendors that handle medical records for hundreds of thousands of doctors in the U.S. Some copy services say, please allow 2 to 20 days to log in the request, okay? So that copy service obviously is going to want to get paid for this service, so they're going to send an invoice to Exam One. Exam One will send payment. Now, some of the copy services accept credit cards, others only accept checks. So Exam One may need to mail a check to the copy service, and then and only then will the records be sent to Exam One. and then exam 1 sends them to the underwriter. So you can see there's a lot of moving parts here. Some doctors require their own special authorization to be signed by the client, so we send that to the client as well. And that can delay things as well. And then say they review my records and see that I was referred to a cardiologist. Well, now the underwriter is going to want to order those records. So you start this process over. So as you can see, this process can take some time. During COVID, it really took a long time because, like every other businesses, doctors' offices were either short-staffed or shut down. These third-party copy services were also trying to figure out how to maneuver through everybody working remotely. And remember when I talked about Principal, they expanded their lab-free option up to 3 million because they were going to order medical records. So here they're trying to have a client not have an exam, but they need to order those records, and now they have this challenge that they're dealing with. So as you can see, lots of challenges due to the pandemic. But the good news is some insurance companies are starting to use services such as human API. When I first started seeing my primary care, my doctor would write nice notes down. I had a paper file. Now they pull out a laptop, they type their notes in when I'm in the office there. I have a patient portal. So everything's done electronically, right? So what Human API does, it basically sends a link to the client where they can link the portal to the insurance company, kind of given their password to the portal so that the insurance company can kind of go and download those medical records. The records can be transferred in a matter of minutes instead of weeks. And some people may say, well, I don't want somebody having direct access to my portal like that. This is the same records that the underwriter would receive by going through the slower process. These are the same exact records. But it does speed the process up. Not all insurance companies use Human API. I don't know if that's an expensive service, but I think more and more are going in that direction. And while we're talking about doctors and medical records, I just want to touch briefly on the difference between clinical medicine and insurance medicine or insurance underwriting. Oftentimes, somebody may be approved at preferred rates instead of preferred plus due to their cholesterol. And I hear this all the time. If my doctor was concerned about my cholesterol, my doctor's not concerned about my cholesterol, so why is the insurance company or the underwriter? And the reason being is doctors have the luxury of treating their patients over a long period of time and adjusting their treatment as needed. If I went to my doctor and my cholesterol was a little bit elevated, my doctor's probably going to say, Jenny, stop eating at McDonald's and do some more exercise and come back in 6 months and we'll see what your cholesterol looks like then. And if it's still elevated, then maybe we'll talk about putting you on some sort of medication. But the insurance company and the underwriter, what they're doing is they're taking a snapshot of your health right now and trying to determine what are the chances that this situation is going to get worse in the next 10 or 20 or 30 years, depending on the life of the policy. Remember, they're locking in that rate and they can't change rates as your health change. Not only that, if I'm applying for $3 million of life insurance, unlike my doctor, the insurance company is on the hook for $3 million. So of course they're going to be stricter about underwriting cholesterol than maybe what your doctor would be doing. And like I said, cholesterol is a common thing. I'd like to talk briefly about the differences in insurance companies because each insurance company has their own sweet spots, if you will, or their underwriting guidelines, and they view things a little differently. Now, the American Heart Association and Quest Diagnostics says that your total cholesterol should be under 200 and your cholesterol ratio, which is your total cholesterol over your HDL, which is your good cholesterol, should be under 5. Actually, they found that the ratio is a better indicator, as more research has been done, is a better indicator of your risk of developing heart disease rather than your total cholesterol. But they still look at both, right? So Company A actually says you could get preferred plus rates with us with a total cholesterol of 220, which is slightly elevated, but your ratio has to be under 5.0 or 5.0 and lower. Company B says your cholesterol could be 300, but your ratio has to be 4.5 or lower. So obviously Company B almost doesn't even care about your total cholesterol, but they're very strict about your ratio. Now, where it gets a little tricky here is that if somebody's cholesterol is 230 and the ratio is 4.7, right? They're bumped into the preferred category with Company A because of their total cholesterol, but they're also bumped into preferred classification with Company B because their ratio is 4.7. You have to meet both criteria. Where it gets tricky is if we tell a client who's applying with Company B, and we say you are approved at preferred rates rather than preferred plus because of your ratio of 4.7, they're going to say, well, wait, Jenny, I have my lab results here. My ratio is 4.7 and it's normal as long as it's under 5.0 according to Quest Diagnostics. And that's true. But Company B is saying if you want to get preferred plus with us, not only does your ratio need to be normal, but it actually needs to be low. So that's how guidelines are different with different companies. In addition to running your client's name through the prescription database, they're also going to run their name through the Medical Information Bureau, the MIB. And no, this does not stand for Men in Black. This is an insurance database that your name goes into whenever you apply for life, long-term care, disability, or health insurance. And it's comprised of member companies that participate in this, and they share information, right? So, there's two purposes of this database. One is to reduce against insurance fraud, and the other one is to make sure somebody isn't overinsured. If you have a client that applied for insurance 2 months ago and got smoker rates, remember smoker rates are like 3 times the non-smoker. So they got smoker rates and they decided not to place that policy, but then they applied with us, didn't disclose that they ever smoked, and the company with us is going to see that they applied for insurance 2 months ago and got smoker rates, and they're going to review the application, and the client said no to ever using tobacco or nicotine products in their life. Okay, so it protects against fraud. Which really protects all the consumers, right? Because whenever there's fraud, who pays for it but the consumers? It also makes sure somebody isn't overinsured. If I needed $1 million of life insurance and I applied with 20 different companies, all those companies are going to see each other's applications, and I could potentially place $20 million of life insurance. I would be overinsured. Nobody wants to be in that. No insurance company wants to have an insured that's overinsured like that because there's too much. I would be worth more dead than alive. So, you know, it's good to shop around for quotes, but actually submitting multiple applications at the same time actually negatively affects the underwriting process. If a client comes to us and has a pending application with an insurance company, we're going to recommend not submitting one through us because we don't want to negatively affect what they have going on. If they get an offer different than quoted, by all means, circle back and we can see if we can improve on that. Especially with accelerated underwriting, a client's going to have a phone interview with the insurance company. So that's another source of information. The past year, more and more insurance companies have, in lieu of doing the phone interview, have actually sent links to the client to complete the health information that way, kind of like we send our link to the client to complete information on our questionnaire. And a common question we got during COVID, during the pandemic from advisors is, I have a client who has COVID, who had COVID, can she get insurance? And yes, life and disability typically was postponed 30 plus days, long-term care 90 days. If they were hospitalized with COVID, typically life and long-term care was postponed 90 plus days. Disability, depending on the severity, would be 30 to 90 days, and they would need to be back at work full time. So let's talk about financial underwriting. Typically, the purpose for your younger clients is income replacement. So there is a certain calculation based upon the client's age and income. Again, somebody who makes $20,000 a year cannot apply for $20 million of life insurance. So there is a certain calculation with that. With disability, we typically need to submit taxes and pay stubs. Now for life insurance, if you have a homemaker who's obviously not bringing income home into the home, they can still apply for $1 million if the spouse also has that amount of coverage. A few companies allow a little bit more than $1 million, but typically most companies it's $1 million. And if the purpose is estate protection, then obviously we're going to take a look at the client's net worth, and the underwriter will estimate estate taxes, and so that goes into the calculation as well. And the fourth area of underwriting is family history. Now, usually we're only concerned about parents or siblings with a history or death of heart disease, cancer, kidney disease, diabetes, or stroke prior to age like 60 or 65. Long-term care, they're very concerned about a family history of Alzheimer's. It can affect the amount somebody's eligible for, or even if they're eligible for long-term care insurance. So we briefly talked about the four different areas: lifestyle, medical history, financial, and family history. For life insurance, the four areas. Now let's talk about some of the changes that have occurred since early 2020. We already talked about the exam. I wanted to reiterate that some of these guidelines have changed, and you know, they're waiving the exam for more clients and allowing more clients to go through accelerated underwriting. So that's good. Marijuana, again, they become more relaxed and less strict on the marijuana usage. And travel, you know, we do have a few companies that are considering foreign travel now. Interestingly, they're not asking about whether somebody's vaccinated, because we do have some clients saying, well, I'm vaccinated, that's why I'm doing foreign travel. So that vaccination status has not been asked by clients, and it hasn't worked obviously in their favor or against them, whether they are or are not vaccinated. Now, policy delivery and payment has changed in the past year. Some companies had electronic policy delivery pre-COVID, but a lot of them still printed a paper policy. We mailed it to the client and asked for a check. Well, just like a lot of businesses, everybody going remote, that's the same with insurance companies. People aren't necessarily there at the home office to receive checks. We were here at LLIS to receive them. But so those companies that were on the borderline of rolling out an electronic delivery, that kind of pushed them to do that quicker. Those that haven't done it, they would send a PDF of the policy to us, and they allowed us to use our DocuSign to have the client sign things electronically and pay, complete a electronic funds transfer form and pay that way. So that has changed. Some of the underwriting guidelines in the beginning of the pandemic, a lot of insurance companies lowered the maximum age that they would consider. They postponed any table ratings. If somebody was tracking at table D, they may postpone making an offer. And certain conditions were also postponed in the beginning of the pandemic. If somebody had exercise-induced asthma, they would postpone making an offer because they considered these people higher risk if they were to get COVID. They've pretty much gotten rid of those temporary guidelines. With the Delta variant, some of the insurance companies have gone back to postponing the higher table ratings. So it's a never-ending changing thing right now. And you know how I said that insurance companies use third-party vendors like Exam Ones to order medical records? They also use Exam Ones for the exam as well as the interview. One of the big changes was one of the large third-party vendors, EMSI, on July 3rd, 2020, out of the blue, they permanently closed their doors with no warning to employees, carriers, agents, or the insureds. So imagine that an insurance company may have 100,000 applications that's currently with the MSI, whether it's, ordering the exam or doing a phone interview. They shut their doors. The insurance carriers now are like, okay, where are these clients in underwriting? Was the exam done? Was the phone interview done? I mean, they just literally shut their doors. So not only are the insurance carriers who are already busy with increased business are trying to figure out where these people are in underwriting and then trying to transfer them to another third-party vendor, such as Exam One. Exam One, who's already super busy, is now taking this increased business. It got to the point that it was taking weeks, if not 2 months, to schedule a phone interview. And you remember how I said that they typically did phone interviews, but some insurance companies rolled out where they sent a link to the client so the client can complete the information online. That's why they started doing that, because they're like, if it's going to take 2 months just to get the first step done, a phone interview, right? That's going to take forever to have these clients go through the underwriting process. So, hey, maybe if we send a link and the client can complete the information, that will speed things up as well. Lots of changes. There were changes with life and disability at time of delivery. We've always had good health statements that a client may need to sign when they get their policy. Those were typically reserved for people that took a long time in underwriting. But with COVID, because your health can change overnight, right, they ended up requiring that with all policies, even people that went through accelerated underwriting. And with disability, the amount you're eligible for is all based upon your job, your income, how many hours you work. So they also need to vouch saying that they haven't had to reduce a reduction in income or their hours or loss or change of job during the underwriting process. So let's talk about long-term care, because there have been a lot of changes in the past year with long-term care, and these are not related to COVID. These are just general changes that have occurred. You may have noticed in the past, I don't know, 4 or 5 years, more and more insurance companies are getting out of the long-term care business or suspending business, and that has been the case as well in 2021. Mass Mutual in January of 21 stopped issuing individual long-term care. In March, Transamerica stopped issuing individual long-term care, and this is in the whole country. Okay, so here you have, I think Transamerica is still allowed group coverage through June or July. I'm not sure about Mass Mutual, but in the individual long-term care business, they have stopped issuing new business. So here you have two major companies that just totally stopped doing long-term care. One of the largest changes that also occurred is in the state of Washington. In April in 2021, the governor of Washington State, signed a bill called the Washington CARES Act. The purpose of this is to fund long-term care for the state and to not deplete the Medicaid system. Think about it, all these baby boomers, right? They're going to start needing some long-term care. And so people are going to spend down their assets and go on Medicaid. So they didn't want to deplete the whole Medicaid system. So they implemented this payroll tax to help supplement that. Now you can opt out of the long-term care tax with a qualifying policy, but the deadline to have a policy in force is November 1st. Okay. Now we have seen a ton of changes due to this. Mutual of Omaha, the only company, most companies for individual long-term care, the minimum age that you could be to apply for the insurance was age 40. So you couldn't be younger than age 40, except Mutual of Omaha allowed age 30 and above, okay? They ended up changing on June 7th. They raised their minimum age to 40. So those people in the state of Washington, this is just in Washington, that were 35 years old and making $250,000, it would be much cheaper to have an individual long-term care policy than to pay the tax. So they needed to submit their application before June 7th. June 17th, they no longer were accepting any applications in the state of Washington. So they still do business in other states, and they still do 30-year-olds in other states. This is just the state of Washington. So we had one other company that we work with that did individual long-term care, and they had a lot of changes. So now the only other company for individual was National Guardian that we worked with, right? And they started making changes in July. They made 4 different changes in July. They were only accepting applications with premiums of $1,000. Then a couple days later, they upped it to $2,000, and then like a week later it was $3,000, and then they stopped all business in the state of Washington. Again, this is just Washington. Now it's important to note they were not raising rates. What they were saying is, we have so much business here, we're only going to process the applications that have higher premiums. Okay. We saw the same thing in August. In August, they temporarily, all companies, individual long-term care and hybrid products, suspended all applications in the state of Washington. Now you may say, well, this is all fine and dandy, but I don't live in Washington, so I really don't care about that. And that may be true, but just to give you an idea of the amount of business that they received, one company said, we have received more applications in the past 3 days from the state of Washington than we normally do in 3 months from the whole country. Think about that. More applications in 3 days from one state than we normally do in 3 months from the whole country. I mean, if your business went up overnight 100-fold, imagine, would you be able to process that business in a timely way? Now, they do have underwriters that are working on just Washington applications, but there's a limited number of manpower, right? So this is going to affect underwriting in the whole country because of the state of Washington. So that was a large change in long-term care. Now, what does this mean? I mean, this whole underwriting for the future, I mean, I don't have a crystal ball, so I can't tell you for sure, but I do know that the lab-free options that for life insurance, they're looking to make those temporary guidelines permanent. It actually has been working okay for them. More insurance companies are looking to do electronic health records. Some insurance companies are looking to do instant approval. You know, we have full underwriting where it may be 2 to 3 months where they're ordering medical records and an exam. They have, some insurance companies have accelerated underwriting where an underwriter reviews things briefly and they may be approved in a couple days. A couple companies that we work with have instant approval. Okay, so basically when they send that link to the client is completing the information online. While they're completing that information, they are running the client's name through those databases. the prescription database, MIB, all of that in real time. I tested this out myself. And as I'm completing this information, I get to the end of my health information, and it was actually strange, but it actually said, it appears that you were prescribed albuterol 6 days ago. I didn't disclose that, but I was. So it found that in my prescription database, and it prompted me. I had to answer the question. What was that prescribed for? What doctor prescribed it? I had to disclose all that. And a second medication was also prescribed, and I had to, give those details as well. So with all the databases out there, they're able to find out this information and gather all that information. At the end, if the client qualifies for it, they may be approved right then and there. And there's more and more databases that they're using, a lot of information out there on people. Vaccine, I have no idea what the future looks like for that. Like I said, they have yet to ask clients whether they've been vaccinated. It may be a moot point, I don't know. But it will be interesting to see, especially as more variants come out, whether that is going to be something that will be looked into one way or the other. But right now it's not. Some insurance companies are looking to work with Quest Diagnostics or LabCorp in lieu of doing medical records, where they can access lab results that have been done in the past, say 5 years on the client, rather than doing the whole medical record process. If somebody has diabetes and they know they're on insulin, because they saw that in the prescription database, you know what the underwriter really wants to see, what's their glucose looking like and their A1C, how controlled is the diabetes? And that's done through a blood test. So let's go get those lab results. We don't really need to look at the doctor's notes. Now, somebody who may be treated for anxiety or depression, they may want to see doctor's records and the doctor's notes about how well a client is doing on that. I sat on a few webinars recently talking about wearable devices. We all have these, Fitbits or Apple Watches, iPhones, where we may be tracking our exercise, our breathing, things like that. Now, this is not being used right now as a standard thing. Talk has been where it may be used in the next couple years in an effort to maybe improve somebody's offer. If they're right on the borderline between Preferred Plus and Preferred, maybe they could use it to bump them up to Preferred Plus. In the next 5 years, I do foresee that will be something that may be used by several insurance companies. But who knows? Who knows? They're still researching that. Now, some conferences coming up in 2021. There's the NAPFA conference that's in October, as well as the ACP conference and the XYPN in November. And yay, hopefully we'll be able to have our conference, our live conference in February. We were only able to do a mini virtual one this past February, but we're looking to have it live in Clearwater Beach in February at the Sheraton Sand Keys. So more information will be coming out about that. Now, let's see, top 10 things that make LLIS different. Well, this is one of them, these free monthly webinars that you can log into and get some CE credits for and help educate you about the insurance industry. We're not your competition. We do a lot of pre-underwriting to find the best company for your client and save your client a lot of money. That's our goal. We proudly sponsor these organizations. And we have specialists in life, disability, long-term care, annuities, and hybrids. And we also service your clients' policies even once it's enforced. We send emails prior to a premium notice being sent out to make sure it's not accidentally, lapse. And then hopefully you've all met Alice at this point. Alice is our secure portal where you can keep up to date on your client's application status. You can, send secure documents to us through Alice and, see information about your client's policies. So questions, it looks like I do have some questions here. Okay, I have a question here. A lot of marijuana questions. Let's do hazardous activities. What happens if you pick them up after the insurance is placed? Okay, so that's a good question. Somebody doesn't skydive now. If they end up doing it 5 years later, that's fine. They can only underwrite you at the time of application. Kind of the same thing about foreign travel, okay? Somebody may not have booked foreign travel. That doesn't mean that if you book a trip 2 years from now, that's going to negatively affect your policy. So if you did not disclose it initially and you were doing skydiving and you were to die of a skydiving accident, then something like that could be, a claim may not be paid because, you didn't disclose it. Now, if you ended up dying 10 years later of a heart attack and you didn't disclose that, you went scuba diving prior to the application process, that would not result in a denial of a claim because that clearly had nothing to do with your death. In the marijuana example, if they get a high rate and then next year rates drop, do we have to reapply for insurance? Yes. So if somebody did receive a high rate in 2020 due to marijuana usage, yes, they would need to reapply to get a better rate. They're not going to automatically lower your rates because they changed the underwriting guidelines. Somebody wrote here that I may want to talk about how there are other things that can affect somebody's underwriting. There's so many databases that they use, and ironically, there's certain things like somebody's historical addresses from 20 years ago. If somebody has moved many, many times, it can affect, it's kind of a consumer report, and there's a number coded with that. And that can affect somebody's approval. It could look like somebody's not being stable. They use these databases, the LexisNexis report, that takes information from 20,000 databases, and some of it may be financial information. It's not like it may be a credit score, but it's not the same credit score that you would get from your typical credit ratings, but there is a score put to that, and depending on what that score is, it can affect somebody's approval, whether they've declared bankruptcy and things like that, of course. Which makes it tricky for us because we don't know exactly what databases they're using and which information from the databases go into that underwriting. Now, somebody asked, is there a way for the consumer to find out what information on them is in the MIB? If they applied for insurance, yes, they can request a report from the MIB. And if something's incorrect on the MIB, they can, appeal that and have their MIB corrected. Okay, can you talk about the underwriting impact of pregnancy and how long pregnancy complications like gestational diabetes can affect pricing? Okay, so if somebody's pregnant, we don't recommend them applying certainly in the last trimester because the process can take a long time. If their labs have been totally normal, they can apply during pregnancy, but if something's a little out of whack, it can affect their approval. If somebody's had previous gestational diabetes, even if they're not pregnant now, it can affect their approval rating. If somebody's had gestational diabetes, even if it was 10 years ago, your chances of developing diabetes as you age increases dramatically as opposed to somebody who hasn't. So that history can affect your approval. With the recent lower insurance quotes for marijuana, should existing policyholders get new quotes? If they had a higher rating, like a smoker rate, then yes, we could certainly research options and see if it's worth reapplying. And does it make a difference where you live now? I have a client in the process of moving from Michigan to Atlanta, Georgia. I don't know if so each state, the rates are very similar if you're talking about if it makes a difference premium wise. Typically, wherever the client lives when we start the application process, and if they're going to be moving during the application process, you know, we tend to keep it where we started it rather than starting a whole new application. We can always change the address once the policy's in force, or we may be able to change the address during underwriting. But as far as rates go, if you're talking marijuana usage, like I said, it doesn't matter where you live because everybody's underwritten the same way no matter what state you live in. And any other questions? I think that is about it. Okay. Well, if you do, you have my email address there, and you can always email me. Thanks.